Yo, what's up, folks? Welcome to Monday's edition of market analysis and trading for the first hour. It's going to be a little bit quiet. We're just going to be developing context for the day. So, reading articles from the Fed, seeing what the Fed's doing, how interest rates have changed, looking at also just some greater macroeconomic data for the US and Japan, and then we'll do some practice on technical patterns, and then in the second hour we'll put in a couple trades. So let me set up my scene. Oh, also my SSD is coming today, so I should be back on the PC starting tomorrow. So that will kind of help things become a little bit more seamless, and I can kind of get back to my typical work environment. Okay, so let me set up the OBS here and go to, wait, what's this here, okay, and then so that's my MetaTrader window, and what I'll do is I'll kind of fit this into the output, and I'll just kind of bring it down. So that's that, and then I also need to set up the not display, but also need to set up the browser window. So let me just grab that. Excuse me, tired. It goes back to energy levels. I got to bed at basically midnight last night, which was not ideal, but we did get up, we went on the run, we did our morning routine, so I'm happy with that. So we're just gonna keep this momentum going for as long as we can, and then just kind of record how I feel throughout the day and throw it in my daily checklist so that I have some more data. Let's why is this difficult? I know how to do this. I need to go to browser, okay, URL. Oh, this is, I can literally have a browser in here. Interesting. I never played around with that. But for now, we'll kind of just go to the window capture. Alright, boom, Firefox, boom, okay. Then we just kind of need to make it fit. It looks like it's too big. So what I'm going to do is get it here. Cool, yeah, so for the first hour of trading window, I usually dedicate that to developing context. I think once I kind of am in the full swing of the routine, the amount of time that I dedicate to this will either shrink, or what I'll do is schedule extend like the trading time, spend more time trading and less time learning, right? So let me go ahead and pull up my stuff. 1 second. gonna pull something out of Google Drive really quick. I mean, I don't need all this. What I'll do is I'll keep things simple. Okay. So one book that I'm reading through is the Candlestick Trading Bible. So this kind of gives um, some like rudimentary indicators that you should look for, patterns. This book is kind of focused on the technical analysis aspect of trading, looking at you know, patterns, trends, and then also it gives a little bit of history as to like the history of the stock market, the history of trading, the roots, its Japanese roots, and then how technical analysis has kind of transformed over time. So where I am, I'm like all the way down page one, pretty much. Well, yeah. So for today, I'll do a little bit of reading here. I'll refresh my technicals, and then I'll go into the Fed. I'll go on the Fed news. Oh, oh, yeah. I'll say Federal Reserve. Just go to and okay, so kind of look at all of these guys. Cool. So yeah, excuse me if I'm not engaging, but I usually just kind of dedicate this time to studying and learning, so it'll be a little bit quiet, and then I'll kind of interact in the second half of this trading block. Alright, that about wraps up everything that I wanted to do for the first half of the trading window, which is just kind of get a picture, perspective for the day, do a little bit of learning, some reading. Got up to page 81 on the Candlestick Bible, and then read some stuff from the Fed to kind of develop and start getting a little bit more resolution and clarity on monetary policy and the direction that the U.S. government is kind of heading in. I think I should also, since I'm primarily going to be trading USD and the yen, I should probably also look at the Japanese Fed information. So I'm going to actually write a note to do that. But typically I also like to do some candlestick pattern trade practice. So let's do that. Let's run a little quiz. Start. 11 questions. All right. Let's see how we do. So this is red. This is a reversal. Okay, indecision candles. Okay. Fair. All right. So this looks similar to like bullish and bearish tri-star candlestick patterns. So if you don't, I guess my takeaway is if you don't have the context of whether or not it's a bearish or a bullish trend into the pattern. So I think if this is a bearish trend paired with this kind of three very skinny candle pattern, then that's I think it's called a bullish tri-star, right? Which is a reversal, right? So this is bullish if it's trending bearish, and then you see those three, very skinny candles. It's a reversal pattern, indicating a bullish reversal. So why did I pick bearish? I don't know. Should have picked bullish. But yeah, okay, cool. Next, what is this guy at the bottom? I think it's a morning star, right? Shooting star is at the top of an uptrend, and it's marked by very short candle and a long wick at the top. Evening star is also a bearish reversal, and it's marked by, I don't know how to describe it, but basically you have like an uptrend, and there's a gap, and you have like a skinny candle, and then you have like another candle below it. So I'll kind of I'll pull up a picture. But first, let's see if I was right. Yeah, so evening star pattern. Yeah, so this is what I'm talking about, right? So you have right here is like you have your bullish trend, and then you have your bullish candle. There's a little bit of a gap, and you have another candle, but it's small. And then in between the gap between the two preceding candles, the third one opens in the middle, like in between that gap, and then closes within the first candle. Excuse me. Okay. It's a shooting star. Alright. Falling candle. This is a bearish engulfing, because this is a a bullish candle, so it opened here and it closed here, so the buyers dominated the market. And then this is a bearish candle, so it opened here and it closed here. Oh wait, so in reverse. So it opened here, closed here, that means the sellers dominated. And then it opened here and closed here, which means the buyers dominated, right? Because the buyers want to buy at a lower price, I think, right? So it shows the sellers are ticking over the buyers. Whoa, do I have it reversed maybe? The bigger red candle means there's a lot of selling going around, meaning the price could go down. Really? Okay, so I'm gonna have to go back and make sure that I fully understand what all these patterns mean, because clearly I'm getting confused, right? So what does it mean to be buyer dominated, and what does it mean to be seller dominated, and how is that reflected in the charts? Cool. Then we have there's a hammer. Right, it looks like a hammer, and it's at the bottom of a downtrend reversal. A is the high. No, A is the high. So this, because this is a bearish candle, it opened here and it closed here. So it's got to be this one. Next. Okay, so this is a bullish candle, so it opens at C and closes at B. I think this is an evening star. Yep. And we looked at that before, right? So it looks reminiscent of these. Two bearish candle patterns. So a bearish candle pattern is a pattern that indicates a bearish trend. A bearish trend is a downtrend. Hammers are found at the bottom of a downtrend, and they're reversal indicators. So it's not a hammer because it's indicated. Hammers are usually indicative of a reversal. So if they're found at the bottom of a downtrend, it's indicative of an uptrend or a bullish trend. A shooting star occurs at the top of an uptrend, marked by like a small candle and a really long wick. It's a reversal indicator. So if it's the reversal of an uptrend, it's got to be a downtrend. Morning star is another reversal indicator, but it occurs at the bottom of a downtrend. And so the reversal of a downtrend is an uptrend, so it's not a morning star. It's got to be an evening star. And we also know that because the evening star occurs at the top of an uptrend and it signals the downtrend. So that. Bearish reversal patterns are most probable when they occur at, okay, so a support level is a level at which whenever price hits, it supports it and goes up. A resistance level is a level that whenever price or action hits, it resists breaking through, and so it goes back down. So bearish reversal means that it's an uptrend and it's reversing to a downtrend. So I think it's a reverse resistance level. Okay, falling candlestick patterns is considered a strong bullish reversal. Bullish reversal signal when appearing after a downtrend. Interesting. Okay, a bullish reversal. So that means that it occurs after a downtrend. A shooting star occurs after an uptrend. A bearish engulfing can occur wherever. A doji can also occur wherever, but usually it's most significant either at the top of an uptrend or the bottom of a downtrend, so it could be either. And I think it's reflective of market indecision. So it's a continuation candlestick pattern. So I'm going to say hammer because one, hammers occur at the bottom of a downtrend. Two, um, hammers have a very short candle body and a long wick at the bottom, which indicates that sellers want to sell. Well, it's like the discrepancy between the candle body and the wick is um, being able to match buyers and sellers within that window, and then a wick either at the top or the bottom um, shows the discrepancy between either what the price the buyer is willing to pay and the price the seller is willing to sell at, like a positive differential or a negative differential. And I think for hammers, it's what if it's a hammer, the wick is going down. Um, Sellers want the price to go down, I think, or sellers drive the price down. It's weird because, like in my head, what I'm thinking as a trader is like, I want to sell when the price is high, but when you think about it in a bigger market context, if lots of people are thinking that same thought, selling when it's high actually drives the price down. So my intuition is telling me that the long wick at the end of a hammer represents um, buyers not being willing to buy at the lower price that people are trying to sell at. Cool. All right. So we did decent. I've never done this quiz before, actually. Um, but what I did do, and what I have been doing, was I made like a. Well, actually, I think I live streamed this last week. My Anki like flashcards practice that I do every morning during this first half, and I guess we've run a little bit over, but I had something like 50 cards in there, and I just kind of run through it, and yeah, so that's just kind of how I got my feel for the various patterns and whatnot. But I think what I also need to start incorporating is like pulling in the context and understanding of, okay, what does this pattern mean in terms of um, market psychology? So what are the buyers trying to do? What are the sellers trying to do? And I think, when you're looking at things on a microscopic level, it might not be especially evident what the value of that perspective is. But as things start to scale and I start trading with more capital, understanding the bigger market context will enable me to kind of have more confidence in, trading. I don't want to say higher volume, but just with higher stakes, because you kind of think of the market as like a aquarium tank with lots of fishes. Um, Me as like an individual person playing in the market, I'm like a plankton, like some like you know microscopic aquatic organism in here with fishes and crabs and sharks and whales um, that are thousands of orders of magnitude bigger in terms of trading capital and volume than I am. So having an understanding of the trading psychology allows you to kind of predict and play the game at sort of like a higher dimension, right? So not only are you able to predict what the individual trader would do, but you can also predict, how institutional traders will respond to price action or um, other disrupting events, right? So hopefully that little rambling was helpful. In terms, I think I also want to just kind of do a quick little recap of all the reading because I had myself muted and I was just taking notes. But big takeaways were use bigger time frames to determine market trending. So you want to use time frames that are longer than 4 hours. So 4 hours plus, daily, weekly time frames, because that just reduces noise, right? So if all that short time scale data is aggregated into larger time scale, it basically smooths out all the fluctuations, the noise. Also, you should buy at the beginning of an impulse. Can't even read my handwriting. Impulse move, and take profit at the end, right? So I think in the book there was a diagram of like a trend, right? So you have a trend, and then there's a reversal, and then there's an impulse move, and then there's a reversal and an impulse move, and basically you want to be able to predict when the impulse move is going to occur. You see the pattern, and you say, okay, I recognize the pattern. I'm getting a price action signal that is telling me that there's probably going to be a reversal, so I'm going to buy here, and then vice versa if you're trying to short. I think there were 3 big skills that that section of the book was really stressing, which was 1, identify patterns. So just kind of on a bigger picture, bullish patterns, bearish patterns, reversal patterns. 2, identify support and resistance levels. Support levels are basically floors. If you're thinking, if you take in economics and you're thinking about like price floors versus price ceilings, and how they relate to supply and demand. Support levels are price floors, and resistance levels are price ceilings. But it's not like set in stone. It's just kind of like a highly probable, what's the word? Phenomena? I don't know. I'll think about how to word that. But it's an event. It's a happening. It's a occurrence. And so you can break support and resistance levels into swing points and trend lines. You draw those levels by connecting swing points, and then you draw trend lines by connecting swing points. And then the third skill is figuring out how to find trends in ranging markets. So remembering that ranging markets are markets where the price action is horizontal. So you have very established support and resistance levels, and the market is oscillating in between them, and you don't really see many breakouts or breakouts either up or down. Figuring out how you can trade and find trends in those markets, right? So there are 3 strategies that I mentioned. The first was wait for price action to approach the resistance levels, right? So you're looking at a ranging market, you see, okay, every time the price taps the resistance level, it bounces down. The next time it's getting close to that resistance level, you can say with a fairly high amount of confidence that price action is going to reverse and become bearish, right? And then vice versa for a support level, right? Then the second strategy was waiting for the breakout from the support or the resistance level. So essentially predicting a breakout, because ranging market breakouts are usually very explosive. So if you're looking to, capitalize on like extremely volatile and large price action movement, that might, be the most bang for your buck strategy, or one of the more one of the strategies that you can profit from a lot, but it's also a little bit tricky to do consistently, because you can also have false indicators of breakouts, right? So like on a large time scale, you're looking at your support and your resistance, and you say, okay, this is very clear. Whenever it taps the level, it bounces down. But as you zoom in, you get a lot more noise, and you realize, okay, it's not actually strictly tapping. It's actually, kind of overshooting a little bit and then coming back down, and then vice versa for the support. It's undershooting a little bit and then it's coming back up. So if your timing's off, and and you don't have a bigger context for the market, and you don't know, what news is going on, and you don't know how everything kind of influences each other, then you could be susceptible to, false breakout signals, which is why that strategy is a little bit tricky. Then the third one, which the book strongly suggests, is wait for pullbacks after breakouts at the support and resistance level. So essentially, recognizing that whenever there's a breakout, there's usually a retractment because the market's kind of trying to stabilize and adjust and come back. So, riding the breakout and then selling if it's a upward bullish breakout. Yeah, selling if you have anything, or shorting. And then if it's a bearish breakout, buying at the bottom and then making the profit on the reversal as price kind of goes up. And I think there was another tip that was like avoid choppy markets. So that's just markets where things are too noisy, it's too many oscillations, and it doesn't. And if that's occurring even on a 4-hour, daily, weekly time frame, then things might be just a little too volatile to be able to trade with confidence, right? Other than that, I think the top-down time frame analysis was another strategy that was mentioned in the book. So it was making sure that you're starting at your biggest time frame, so weekly, daily, whatever you choose. You're using that to develop context, and then you kind of look to the shorter, smaller time frames to influence and inform trading signals. So when you want to kind of jump into a trade. So you kind of want all these things to be congruent and line up with each other in order to have the most amount of confidence that you're making a good decision, right? So in terms of what that looks like on a trading strategy level, say you have a chart, you're looking at the weekly time frame, you put in your support and resistance levels, then you look at the market structure. Is it trending? Is it ranging? Is it choppy? Then you look at the previous candle, so the last candle on the weekly or the daily. If it's bearish or bullish, that also kind of gives you, and then also the size of it and the proportion of the body to the wick gives you some context for what's happening during the week. Then you kind of zoom in to the 4-hour or the daily time frame, and you're looking for market conditions. So again, trending, ranging, choppy, you can want that to kind of line up with what you saw for your weekly, daily. Looking for key levels, support and resistance levels, supply and demand areas, trend lines, making sure things line up with that longer, bigger time frame. And then third, price action signals, so looking at candlestick patterns. And once all those things kind of come together and paint a picture and things are lining up, then that's a good sign that you should, jump in and buy or short the market. Anything else? You can also trade counter trends, but it said that that's a little bit more advanced. So it wasn't really something that was promoted as strongly as just kind of the traditional top-down price action trading approach. But and then it kind of gave you some questions, right? So like when you're looking at market trends, you got to ask yourself, like, what is the market doing? How are the buyers and sellers interacting in the market? When you're looking at when you're looking for levels, support and resistance, and trend lines, you got to ask yourself, like, what are the most powerful levels? Because you can probably find a bunch, but you want to find ones that are repeatedly proven to be true, right? So you could have a level that is only tested once or twice. That's probably not as strong as a level that's been tapped 3 or 4 times. And then finally, signals, patterns, psychology, messages. Asking yourself, what are the best entrance signals, right? How do I figure out when it's time to enter and take a position? And then we also read a little bit of news from the Fed. To be honest, I don't know how much I really absorbed. It was kind of like a foreign language, but from that first document that I read, it seems like the projections for change in real GDP were decreasing, although they're projecting an increase in um, they're projecting an increase in GDP of 1 to 2% for I think it was a quarterly report, maybe it was a monthly, I can't remember, but that change was actually smaller than the change in the change in change of GDP. No. The change in change of GDP is smaller. The change in GDP is still positive. Unemployment's also up. I think the change was like 4 to 4.5% projected, and that change is increasing relative to the last 4 months or whatever the last year, however they kind of broke things down. And then the PCE core was, I think, like price consumer expenditure index, kind of like an index that measures the price levels of everything that people buy, minus, I think, spending on utilities and energy or something like that. So that's kind of about the same, and that's increasing 2.5 to 3.5%, which is consistent with how it's been increasing year to year. And then finally, the FFR, federal funds rate, interest rate at which I think it's like the Federal Reserve lends money to the banks. I think, don't quote me, I'm a little rusty on this, but that's the beauty of starting this project and streaming with you guys, is the more that I'm actually kind of explaining things out loud, the better I'm going to learn and kind of be on point with this stuff. So excuse any inaccuracies, as always, point them out to me. Let me know if I make mistakes anywhere, because we're just trying to get better, right? So that kind of summarizes what we did this morning. Now it's time to put it into practice, right? This is the fun stuff. So let me open up MetaTrader. Data window, you can just kind of get rid of that. I don't like the way this looks. I'm gonna change it right now to, I think that looks cleaner and it looks nicer, right? So let's just do what we read about, right? Let's look at the weekly time frame. So this is the currency pair USD Japan. So it's the price of a US dollar relative to 1 yen. And we can see that this is a ranging market, right? It's just kind of moving horizontally. Okay, so I'm gonna have to expand the window a little bit, which sucks because you can't see. Maybe I can like scale it down. Let's do this. I'm gonna blow it up a little bit because some of the stuff is being cut out, and then I'll shrink it down here, and you can see. Oh, there we go. Boom. Oh, I turned off my webcam. My bad. Cool. So we're looking at the weekly time frame, and if we just kind of scroll, we can see this is really a ranging market, right? At least over the past year, this has been a ranging market. So, what are the three things, right? We're looking for market. We're looking for patterns. We're looking for support and resistance, and we're looking for market structure, right? So we know it's a ranging market. We're looking for support and resistance levels. This looks like a support level. How do I put one of those thingies on here? Tools. No. Insert. No. object, horizontal line, put it here, boom. We'll call it properties. We'll call it weekly support. We'll make it green. Because, you know, supporting things. We'll make it green. And then, do we have any resistance? Let's see. No. Looks like this is a resistance kind of here in this area, right? So it touches kind of close, touches kind of close. Over here it touches. This is also a high. That was also a high. So it looks like, you know, clearly we have one up here, 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 but this is also some kind of level. So let's put a line in. Put a line in. Wonder if I can. I can't. I was gonna try and copy and paste it, but you know, that'll be too easy. So let's put this guy here. We'll just say this is the weekly resistance. And I'll make it red. So price is bouncing in between there. So we got our support, we have our resistances. It's not perfect, not pretty, but it'll work. And let me blow this up for you guys so you can see it a little bit better. And this is another one, so I should put this here. I'm not sure. We're not sure. I'm gonna make this yellow. Weekly SL or SR. Cool. So we looked at this on the weekly time frame. Now we're going to blow things up and look at it on the daily, right? So this gives us more resolution. We can see the support, the weekly support is not even showing up on the graph, right? So this yellow guy is going to be a lot more useful to us. And we can see that. What the heck? Sorry, I got a text. Give me 1 second. Cool. Sorry. So where was I? Okay, we're on the daily. We get a little bit more resolution. The daily is also a ranging market relatively. Looks like it's kind of moving horizontally. There have been a couple of breakouts, but things are still kind of within these two lines. So let's move to the 4 hour, right? On the 4 hour, we got a lot more resolution. How do I, okay, better. Okay, so now I can kind of scroll, right? So that's our resistance level for the week. It's trending down, downtrend, and there was an uptrend. So I think the 4 hour time frame is a trending market, and we're looking at this last candle. We got a bullish engulfing after doji candle right at the bottom. This is volume, so it just kind of tells you how many trades, like the amount of, I don't know if it's how many or like how much money is moving. It's probably money, if I had to guess. I'm gonna write down so that I remember to look that up and to know for future reference. But understand trading volume. basically the more volume you have, the stronger the price action signal, right? So if you have a lot of volume on a bullish candle, that means that it's got a lot of momentum, and you know you could it, it's likely that a bullish trend will be occurring in the near future. And same thing for bearish, right? If you have a lot of volume and you have a bearish candle that's long with a big body, it's indicative that, you know, the bears are going to dominate the market and it'll start trending in a bearish direction. So let's look at a little bit of a smaller time frame. So we're looking okay, so this is where we are currently. This is actually, what? I guess so, it is. It must be. Yeah, it is. This is where we are currently. We can't even see the yellow line. The yellow line's in the ground. So this is a little tricky, right? This looks like it's setting up to be a Marubozu, which is, I don't know, I can't remember. Is that a continuation pattern? Let's see. Let me just look that up real quick. Marubozu. Marubozu is and then let me show you guys what I'm looking at. Marubozu dominating candle. Okay. Cool. Boom. So Marubozu is not even, it's not a pair, it's a single candle. Okay. Interesting. So I learned something. To be honest, I don't really know what's going on in this market. I can't really tell. I think like if I zoom out to the week, obviously you follow the trend, okay, you know, up, down. So I could just say down, right? I think it's going to go down and tap this support level again. It's going to test the support level. The only thing that kind of throws a wrench in that is that there's kind of this intermediary support level that's been formed that it tapped and it is rising from, right? So that's what's really kind of thrown a wrench in my ability to confidently say that I know what's going on here. But fuck it, we're in a demo account, so let's put a position. Let's put a position down. Let's say I don't even remember my login. What is my login? The hell is my login? Okay, we got in. We got in. Perfect. You guys can't see anything. My bad. Alright, so let's put in a trade. Let's put in a new order. You guys can't see anything. Let me just add a display capture here, because it's kind of annoying to have to like add each window piecemeal. Boom. Shoot. Webcam to the top. You got the display capture. I need to shrink it down. To shrink this guy down. Keep him moving. Okay, better. Stretch it out. Jankily get this thing to be visible. Alright. So let's put in a trade. We think it's going to go down. We can look at smaller time frames. It's just there's a lot more volatility, so it's hard to predict things. Okay, interesting. 1 hour going up, going down. 15 minutes. Sometimes I just like looking at the really small time frames to see if that gives me any clarity, but I think it's just noise. Cool. So let's put in a trade. How do I short something? So first, I guess this ties into how do you trade, right? How do you come up with a trading strategy? So the first thing is managing risk. So you allocate how much risk you're willing to, how much of your total capital you're willing to risk on a single trade, right? And I think common wisdom, based on what I read and what people have advised, is that you don't want to risk more than 2% of your trading capital on a single day, I think. So like over the course of the week, if you're trading 5 days a week, you don't want to waste more than 10% of your trading capital. So let's say, like me, you're saying, hey, I want to make 1 to 2 trades a day, risking 2% of my trading capital. This is a demo account. I think it's got $10,000 in it. So 2% of 10,000 is 200. So we will throw in 200 on this trade, right? So, oh shoot. Okay, wait a second. How much capital do I have in the demo? Just want to make sure that we're Gucci here. Oh, 1,000 USD. $10,000 account, you want to risk, yeah, so let's say 2. Interesting. So you can't go lower than that here. Interesting. And you can also set your take profit and stop loss, right? So sorry, I do that a lot. I get sidetracked. So once you've figured out how much risk you're going to allocate to your trade, you need to set up your take profit and your stop loss. This basically helps you manage risk, right? So prevents you from sitting on a trade for too long because you think, oh, there's a chance that it'll go back up, or sitting on it too long because maybe you're shorting and you're like, or you're waiting to buy and you're like, maybe it'll come down, right? So the take profit, stop loss basically are predetermined levels or thresholds that once a price reaches, you say, hey, I'll cut my losses, or I need to take profit. So usually I think those are expressed in terms of like risk to reward. So I think a good risk to reward is anywhere like above 2 to 1. So basically, if you take 3 trades at a 2 to 1 risk to reward ratio, wait, what the hell? Okay, so the other kind of confounding thing is your success rate, and we don't know what the success rate of this trading strategy which kind of throws a wrinkle into things. But if you know what your risk to reward ratio is, I'm risking 1 unit for every 5. I'm risking a 1 unit loss for a 5 unit reward. Basically, you can trade 6 times, you can have a 16.666% win rate on your trading strategy and still break even, right? So if you have one win every 6 trades with a 5-to-1 risk to reward ratio and you're risking the same capital each time, you can have a 17% win rate on that trade and not be losing money. And that's kind of like the surface juice interpretation of how you kind of set up a trading strategy. But for now, this is just kind of getting a feel for the MetaTrader environment. Yeah, so the video that I'm about to upload, I'll upload it tonight actually, is going to be like a tutorial of MetaTrader. So one, how you set up your account and also the demo account, how you kind of organize your environment, and then what tools you should know, how to use and what to use. And that's gonna be the first video, and I'm just gonna make a series, right? So like how to start trading, and I think that'll be kind of what I'll be releasing weekly on Mondays. And because I didn't really do a whole lot of trading last week. Like I maybe did a couple practice trades on the demo, but I wasn't tracking them and I didn't put them in my trading journal, which I should have. So moving forward, I think once like I have momentum and I'm kind of abiding by the system that I set up, we'll be able to kind of extract a lot more value out of the process. But for now, it's kind of like things are kind of in a state where, okay, I've kind of thought of all these systems and routines, and now it's like, okay, I need to kind of put it together and actually adhere to everything for this thing to work. But I digress. Let's put the trade in. So because we can't trade $200 for whatever reason, we're going to trade $1. And take profit. Okay, so we're trading it at market. So I guess that's another thing, right? So you can, when you make a trade, you can either say, I want to make this trade at a specific price level, or I want to make this trade at the market price. I think it makes more sense to make, at least starting out, to make a trade at a set price level, right? So if the price hits this, then I'm going to buy, and I'm going to set my take profit and my stop losses, and you can kind of just automate everything and you don't have to think about it. But I haven't really thought about how to do that live, so what I'm going to do is just going to buy something at market, right? I think it's going to come down because it is a ranging market. I think it's going to come down. So say we put 2,000 bucks in our stop loss, and you can, I think what's really cool is you can kind of see where you're setting your stop loss. But let's boom, and take profit. Oh no, stop loss needs to be way lower, bro. Stop loss needs to be like 149. Oh, but I think it's gonna go down. So how do I even short, man? Okay, I want to short because I think the price is going to go down, but I don't know how to do that in MetaTrader. So I'm gonna figure out how to do that, and I'm gonna append that to today's video. I'm gonna show you how to short in MetaTrader. Show you how to buy, sell, short. Cool. All right. Well, that's all I really had planned for today. Appreciate everyone that tuned in. Things are kind of, the ball's rolling a little bit. I think this went better than last Monday's stream, and as I kind of do things more and more and refine the process, we'll have a well-oiled machine. It'll be firing on all cylinders, and we're going to build something beautiful. I think there's a lot of potential in what I've set up, and if I can do things right, I think it's just inevitable that, you know, a lot of people kind of hop on and see the value in what I'm bringing. So once again, appreciate you guys for tuning in. Stay juicy, stay safe. Let the juice loose.